All right, everybody, welcome back. Ready for another deep dive?
Let's do.
Awesome. So today we're going deep into the world of venture capital. We're talking VC performance. Specifically, how do you even measure success in a field where the results, well, they take years to actually show up?
Yeah, that's a really good question.
To help us unpack this, we've got this great article by a seasoned VC. They're reflecting on their experiences, the challenges they faced. And it got me thinking, like, can you imagine waiting like 7 to 10 years to find out if all your hard work actually paid off?
It kind of flips the script on how we usually think about success. You know what I mean? Most of us, we're used to relatively quick feedback loops. You do something, you see a result. But VC, that's a whole different ballgame. It's like the ultimate long game.
Absolutely. And, our VC here, they call this the long feedback loop.
Mm-hmm.
And it's a real head scratcher. How do you stay motivated? How do you adjust your strategies? How do you even know if you're on the right path when you have to wait like a decade to see if your bet's paid off?
It's like imagine planting an apple seed and then having to wait 10 years to see if you get like a delicious Honeycrisp apple or if you just get like a
Right.
dud, right?
Exactly. And it's not just the fruit of your labor that's delayed,
Yeah.
it's the feedback on your whole approach. Like you make an investment today based on what the market looks like now,
Mhm.
right? But fast forward 7 years, who knows? That industry could be booming. It could be a total bust. How do you even begin to judge performance in that kind of environment?
It's really, really tricky.
It makes me think about all this like VC success stories we hear, right? The ones that get splashed across the headlines.
Oh, yeah, for sure.
It's easy to forget that that's just like a tiny snapshot.
Totally.
Right? It's like looking at someone's perfectly curated Instagram feed and feeling like, oh my gosh, my life is so inadequate.
Mm.
But, you're only seeing the highlight reel, right?
Right. That's a great analogy. And, RVC in this article, they actually call this the whiplash effect. It's that constant contrast between, the public perception of VC, right? This glamorous hit making machine, and then the reality, which is so much more like complicated. There's so many nuances
Right.
to.
Like so much happens behind the scenes.
Oh, absolutely. In fact, they actually mention this one company they worked with. At the time, everyone was saying it was going to be the next big thing, millions in funding, a charismatic founder. It had like the whole package.
Wow. Sounds like a sure thing.
You'd think, right? But behind the scenes, it was a completely different story. The tech, it wasn't really there yet. The team, they were always fighting,
Mm.
just constant headbutting. And ultimately, the company, it just fizzled out. But most people, all they remember is that initial hype.
Yeah. Like a shooting star.
Yeah.
Bright for a second, then gone.
Ex-
It really shows how hard it is to find those like neutral benchmarks
Yeah.
to measure VC success, right? If we're only focusing on the big wins, we miss out on all those valuable lessons from the ventures that, maybe didn't hit it big.
Yeah, yeah.
What do you think? Like, what would a true neutral benchmark even look like in this field?
Man, that's the million-dollar question, right? I mean, I think our VC here, they make a really interesting point, which is that the very structure of these VC firms, it can make it hard to, get a clear picture of how individuals are actually performing.
Hmm, interesting. How so?
Well, you see, a lot of times partners, they operate pretty independently, which, of course, it has its advantages. You get to, like, chase your own passions, your own hunches, right? But on the flip side, there's not always a lot of built-in feedback, not a lot of collaboration either.
Ah, so you're kind of in your own silo.
Yeah, exactly. You're in your own little world. And our VC, they actually mention that sometimes the best feedback, the most valuable feedback, it came from people outside their firm, people who could offer like a truly fresh perspective.
Wow, that's fascinating. Like, sometimes being too close to something can actually cloud your vision.
It's like that saying, right? Can't see the forest for the trees.
Exactly. You get so focused on one tree, you miss the whole forest.
And this whole lack of clear benchmarks, it also ties into another challenge our VC brings up. It's this thing called attribution bias. And this one's sneaky. It really is because
Yeah.
it plays on like our natural human tendencies.
Oh, this sounds dangerous. Tell me more.
It's all about how we assign credit or blame for outcomes, right? And, in a field like VC where luck plays such a massive role, it can be really tough to separate actual skill from just, being in the right place at the right time.
Yeah, being lucky.
Exactly. Like, think about it. Think about a time when you just, aced a presentation at work. Was it all down to your hard work and preparation? Or did you maybe, benefit from a particularly receptive audience? Or maybe a competitor just totally fumbled?
Oh, for sure. There's always stuff happening that's outside your control, for good or bad.
Precisely. And it's human nature, right? We want to take the credit when things go well, and then when they don't, we're quick to blame external factors. But our VC, they make this really important point. They say, and I'm going to quote them here, it's as easy to overestimate your role and take undue credit or responsibility as it is to attribute too much to external factors like luck.
So finding that balance is key.
Yes, acknowledging both your skill and effort, but also being honest about those outside factors.
That takes a lot of self-awareness.
Yeah.
And speaking of feedback, RVC brought up another interesting point. The lack of direct feedback when you're in a board role. Since VCs often sit on the boards of the companies they invest in.
Oh, yeah, for sure. You'd think that would be like the perfect opportunity for feedback. You've got the founders, you've got your fellow board members.
Yeah, it seems like a pretty direct line, right?
Right. But the thing is, it's not always that straightforward. You have to remember founders, they might be hesitant to critique their investors, especially if they're, worried about jeopardizing future funding.
Makes sense. Don't bite the hand that feeds you, so to speak.
Exactly. And even among the board members themselves, there's often this reluctance to, like, step on each other's toes or rock the boat too much.
So you're in this position where you're really craving feedback so you can improve. But the whole setup makes it hard to get that real, honest critique. It's something we can probably all relate to in some way, right? Whether it's at work, in our relationships, or even just like when we're trying to be honest with ourselves.
Absolutely.
So, stepping back and looking at everything we've talked about today, it's pretty clear that judging VC performance is not a walk in the park.
No, not at all.
It's way more complicated than meets the eye. You've got the long feedback loop, the lack of those neutral benchmarks, the individualistic work style, that sneaky attribution bias, and then the whole feedback challenge when you're on a company's board. It's a lot to untangle.
It's a whole web of factors, yeah.
So here's a question for everyone listening. If you were the one tasked with evaluating a VC's performance, knowing all of this, what would be the top criteria on your list? How much weight would you give to things like market conditions, team dynamics, the VC's individual choices, and, yeah, even luck?
It really makes you think. How do we define success in a field that's as unpredictable as VC?
It's a great question. One that definitely deserves more thought. And, maybe that's something we can unpack in a future deep dive.
Sounds like a plan.
For now, though, that's all the time we have. Thanks for diving deep with us today.
See you next time.